It's very difficult for the Bank of Japan to go on a series of rate hikes, as you call it, right? They have fiscal concerns to be cautious of. And if you just look at that Tokyo CPI print that came out this morning as well, I mean, it was considerably weaker than expectations, than the previous month as well. Although, of course, there were some one-off items in there that played a part, but certainly doesn't look like we will continue to get those macro conditions that could support another rate hike as well. I mean, I think it really remains difficult for Bank of Japan to move at an accelerated pace, also considering the kind of impact their moves would have on global bond flows, right? I think that is something that they have to be really cautious of as well. So if anything, again, I mean, going back to dollar yen, the move really has to come from the US side to bring a really sustainable recovery in the Japanese yen.
Charu, good morning, it's Guy. So what do you do if you're the Ministry of Finance in Japan and you're watching the yen ticking lower and lower and lower? Where's the line in the sand? Like Ueda just said, we need to watch the FX and its impact on inflation. This is going to add to inflation. The imported inflation story is going to be significant if we keep going at this kind of a rate. When do you do something about it if you're the Ministry of Finance? When do you take action? Is it after the US data today? Do we wait a bit longer? What is your thoughts on that?
It certainly seems like they want to remove that mentality around lines in the sand and really focus on the pace at which we are seeing this deacceleration in the Japanese yen. So earlier it was the 152 level in dollar yen that was being watched, then 154, 155 now. Certainly all these levels have been cleared without even, I would say, the narrative taking a leg higher at this point. So it does mean that we could test the limits of the Japanese authorities here. If you go back to some of the comments that we got from the FX chief in Japan earlier, he said that a move of about 10 yen in a month against the dollar, that would be the threshold for intervention. We're not there yet. The early April lows were about 150, 151. So we have to get to really 160 for that to be a concern. And if we don't get to that by the time we get to next week, then again, the threshold goes higher. So I think it really depends on the pace of the move rather than the levels themselves at this point.
But your theory would be that if we don't see more hawkish narratives emerging from the authorities in Japan, the BOJ, that if we do see intervention, the right reaction would be to sell the yen on the back of that after the initial move has faded, i.e. it's an opportunity to work against the yen rather than kind of retreat from that position.
Right, absolutely. That's exactly what I'm trying to say, Guy, because as I said earlier, the sustainable move lower in dollar yen or a sustainable strengthening of the yen can only come from the US side, where we start to see some economic weakness in the US, some more signaling on Fed rate cuts. And I think we're just getting further and further away from that rather than getting closer to that at this point. The BOJ can only cover a very small distance in that yield differential that we have from 0% to 5.5% from the Fed. They can cover a very small part of that distance, right? So any move from the Japanese authorities in terms of an intervention, they either have to be coordinated, with Korea, like we got a statement with Janet Yellen. That could make the move a little bit more sustainable, or it has to come with that turn in the Fed policy, which we're not there at yet. So I would think the markets would continue to position to fade the move if we were to see a strengthening of the yen on the back of an intervention.